Vietnam experienced several storms in November, mainly in central Vietnam, causing about $546 million in damage. Manufacturing was largely unaffected as major hubs sit in the north and south, but agriculture and aquaculture were hit hard, pushing food prices higher. Retail activity, especially tourism in central Vietnam, also softened. Despite the weather, the manufacturing PMI stayed strong at 53.8, with rising output, new orders, and employment. Trade remained resilient. Exports grew 16.1%, imports 18.4%, and the trade surplus reached $20.5 billion in the first 11 months of 2025. Retail sales growth slowed to 9.1%, but the government is stepping up measures to support consumption, including higher tax deductions and proposed personal income tax amendments backed by a $13 billion budget surplus. Inflation climbed to 3.6%, mainly from food price increases tied to storm-related crop losses. Eating out costs rose under the new household tax regime, while housing, construction materials, and transport prices also added pressure. FDI remained strong, with $23.6 billion disbursed, posted 8.9%. Key developments included Sire's $1 billion textile recycling partnership with Nike and Foxconn subsidiary Fusion Technologies' plan to expand phone and electronics production in Vietnam. In November, the VN Index rose 3%, but the entire gain came from Vingroup-related stocks. Without them, the index would have slipped 1.3%, as most other names remained quiet. Vingroup's rally despite limited fundamental changes and was amplified by its extremely low free float, with 173 investors holding over 92% of voting rights. Valuation and leverage level are stretched in our view, with VIC trading at a 2026 forward PEB of 7.0 times and a DE ratio of 2.0 times as of the third quarter of 2025. Year to date, the VN Index gained 31.1%, of which Vingroup-related companies accounted for roughly two-thirds. Average daily trading value eased to $867 million as rising deposit rates in the banking system led to moderation in trading activities. Also, a series of new issuances drew liquidity away from secondary trading as investors allocated capital to primary offerings. Foreign investors remained net sellers, but outflows moderated to $313 million, below the $1 billion monthly outflow seen in the last 3 months. FTSE Russell also released the projected weights of Vietnam in its indices, which range from 0.04% to 0.34%. The inclusion will be made in multiple tranches and details of the phased implementation will be announced, subject to an interim assessment in March 2026. Sector performance diverged. Real estate surged, driven by Vingroup. Consumer sectors strengthened on new personal income tax regime, while IT faced pressure from global tech sentiment. Despite this, key names like FPT continue to see strong foreign buying of $143 million in the last 2 months. Our portfolio declined 2.7% in November, while the FTSE Vietnam Index rose 5.3%. This divergence was due to Vingroup-related stocks, which account for nearly 30% of the index. Without this group, the reference index would have fallen by about 1% during the month. The same pattern holds year to date. Vingroup-related companies contributed more than 92% of the index's total return, while the rest of the market added only marginal gains. As we have highlighted in previous updates, we maintain a cautious view toward this group, as the recent rally shows limited connection to underlying fundamentals. For that reason, we have no exposure in the portfolio. Instead, we continue to focus on opportunities in overlooked companies with stronger earnings visibility. The VN Index trades at 11.2 times 2026 forward earnings, yet most stocks have not re-rated despite solid profit growth. In 2026, we expect a shift toward a more earnings-driven market.
EPS for the top 100 companies is forecast to grow 12.3%, with Vingroup-related names contributing only a small share.
Together with Vietnam's expected FTSE secondary emerging market upgrade, this points to a more balanced market and compelling opportunities among undervalued, fundamentally strong stocks.